Big moves in the silver market. We are moving through a historic time. Big reasons why we want to keep a close eye on what's going on in China. They are dictating the future of the silver price, and we got a lot to cover when it comes to China today. But what about $200 silver? What about $700 per ounce silver? Is that where the price should be right now? There's some analysts that are saying this, and we've got a really cool example that shows us from a historic basis we should or could very likely be at $700 silver right now. One thing I do know for sure, thank you for joining me down here in the basement. It's a big honor when you come down here and are part of this community. Please subscribe to the channel. That way, every time we do an update, you'll get alerted. We're going to stay on top of what's happening in the silver and gold sector. We're going to do it together because you're going to give this a thumbs up. You're going to press that bell notification. Most important, really, seriously, we want you to come back. This is just a cold, dark, dank basement without you. The silver price is down today. We're going to talk about that. The reason why we're getting this volatility on a short-term basis. And then we got to zoom out and talk about China because it's fascinating. But it's all about the dollar right now, guys. The dollar index is dictating the silver price. Yesterday, we had a rather large downdraft in, let me pull up a 5-day chart. This is the DXY index. This measures the US dollar against a number of other cruddy fiat currencies. Let me see if I can get the, no, I don't want to subscribe. Hold on here. Okay, as you can see, this is a 5-day chart. The dollar has been going down. That is providing support to the gold and silver price, but on a short-term basis. And there's a big reason why we want to look at the DXY index on a long-term basis, because it gives us massive reason to be optimistic about where we could go. Let's go out here and look at this on a long-term basis. And I want to draw something for you. Boy, the web is not cooperating today. Here we go. All right, here we go. Hold on. As you can see, this is where we are right now in the DXY index, around 100, a little below 100. But if we draw a line on this chart right there at the 100 level, you can see that many times in the past, we've gone significantly below 100. Here's 75. As you can see, we hit 75 at this time frame. We hit it again in this time frame as well. What happened, and the reason why this is so important, is that between about 2001, which is right there, and 2011, the DXY index, as you can clearly see on this chart, went down. But also, the most important thing, I'm going to look you in the eye when we say this, right? Because look, guys, hold on here. We got a long way down that we could go from where we are down to 75, which has happened many times. We were even down probably around 80 back here. What happened, though, during this time period right here from 01 to 2011, now I'm going to look you in the eye, is the price of silver went from below $5 per ounce all the way to $50 per ounce. And guess what? That was a speculative futures-driven paper type rally. This time, things really are different. One of those big things that is different is China, and China is ruling the roost. Now, some people claim when it comes to the world economy, we're not even going to lump India in there with them because India is a major factor as well. But if we just focus right now on what's going on with China, I got a lot of reasons why we can be optimistic about the gold and the silver price in particular. Let's start right here. And that is, this is warning. Hold on a minute. I made that too small. Bear with me. We are live. Here we go. We're up to 100%. Here we go. This was shared by Mr. Brian Kuzmar, okay? This is the warning that's coming up, and I'll explain to you why. The Shanghai Gold Exchange will be closed from February 15th through February 23rd with no night trading on February 13th, resuming on February 24th. It's their, I think, Chinese New Year celebration. Guys, they're going to shut down the precious metals markets for what, 8 days, 11 days? There's different dates out there about this. Yeah, it looks like about 8 days. Leaving the price. This is the danger. This is the warning of gold and silver in the capable hands of the LBMA and the COMEX for the week. I mean, China, look, when we say China king, we aren't talking about the place where you go get the Chinese lunch buffet. China has become the king of the precious metals. The warning here, and we've experienced this in previous years, that when the Chinese market does shut down for their annual celebrations, sometimes let's say there's a little bit of manipulation. What? At the LBMA and the COMEX of the gold and the silver price. So I just want to set the table for you as we move into this time period that we might be in for some interesting developments in the price of gold and silver. Who knows which way it could go, because there's a lot more to cover about what's going on in China. This is our normal data that we look at almost every single day. But there's actually two big things in this data that indicate to us that things just aren't right in the silver market right now. When I say not right, I mean that these reasons give us some optimistic feelings about silver. Peter Spina shared this. China is being drained of silver down to fresh lows, about 31 tons to only 318 tons. Shanghai could be emptied out in the coming weeks at this aggressive rate. We know what's going on at the COMEX, right? With what, 400 million ounces outstanding for March delivery and only about 100 million ounces in the vaults. But what is happening in China to the vaults is also crazy interesting. But there's something else on this report. This came from our friend Oriental Ghost. Guys, of course, in China, the actual silver price, we look at this almost every day now. We've been looking at it for years, but now everybody's bringing it up. On the Shanghai Gold Exchange, right there it is right there, silver. This is the physical price of silver in China, close to $88 per ounce. Now, when we go down here, these are the vaults. There's the vaults down there on the lower left at the Shanghai Futures Exchange. As you can see, 318,000 kilograms, down 31. Okay, it almost lost 10% of their total yesterday. But what's even more interesting that we want to point out in this data, hold on here, I'm going to erase it all, is this. If you look at the spot price of silver in China, $88, look at the futures price. Look how much higher it is. Okay, 90, there's like a $5 price difference. Let's talk about what's going on in the West between the COMEX and the LBMA. The prices are just about equal in the United States between the spot market and the LBMA and the futures market on the COMEX. There's no real difference, but there is this huge difference in China. Now, there's a reason why that's so important. Again, in the West, right, we're in a state of, we're not in backwardation, we're not in contango, we're in a state of backward tango, we would call it, about equilibrium, about equal. Last I checked, about an hour ago, maybe it's changed a little bit. That's not the point. The point is that in China, the fact that the futures price is so much higher, some people are speculating that's because of that big, massive short position that Mr. Bian has, and that's what's causing this massive price, this massive state of contango in the Chinese markets. Maybe not massive, that was not the right word to use, but significant, right? Especially when compared to the Western markets. So the vaults are draining. That's the number one takeaway. Number two, they are in a state of, at minimum, what we would call healthy contango, and there is a speculation that could be caused by what's happening with this massive short position, which has been ruled to be, I don't know, inappropriate, whatever the case may be. And don't forget, Mr. Bian, he's the Chinese billionaire that made $3 billion going long on gold and has a 15 million ounce short position in silver. When he's short, he's got to pay all that back. He's got to buy all that silver back, which could create a massive, at some point, anyone who's short has to cover their short, has to buy the metal back, right? That could speculation. Look, do your own research, form your own opinions. You got a good head on your shoulder. We know that, right? Google told me you're sophisticated, but it does make good common sense that we could be setting up for what could be a really epic short squeeze. Let's go out here to the Kobesi letter, one of the most respected sources of financial information out there, period. Let's see, how many followers do they have on X now? 1.3 million followers. Silver, they bring up an interesting point about the situation in China as well. Silver inventories on the Shanghai Futures Exchange are collapsing. Shanghai's silver available for delivery is down to just 350 tons, the lowest since 2015. If my math is correct, that's longer than 10 years, guys. That's 11 years, the lowest that they've had in the Shanghai Futures Exchange in terms of available inventory. And it's even more stunning, right? This puts this in perspective, that marks an 88% decline from the 3,000 tons seen in January 2021. This tightness has been exacerbated by heavy silver exports from China to London in 2025, when London had their squeeze, which alleviated the global physical squeeze, but depleted local stocks in China even further. Okay. Danger zone when it comes to the amount of silver available in China. Now, let's go to another story out of China. This one from Alistair McLeod, another like long time, decades. For those of you who are new, Alistair McLeod is like one of the gods of the silver and gold community. He says, Mr. Bian, okay, Bian Ximing. Yeah, that's the Chinese billionaire who sold silver short, sold silver futures short, equivalent of 450 tons on the Shanghai Futures Exchange. He is now stopped from selling anymore, and the Shanghai Futures Exchange is closed over their New Year's celebration that we covered earlier next week. When anything can happen, alternatively, he will have to deliver 450 tons. In purple, conditions for a massive bear squeeze. Again, this is Alistair McLeod pointing this out. We'll leave it at that. Mic drop. And then on top of it all, the Chinese cherry on top, and this goes back to what we started the show talking about with the US dollar, William Middlecoop brings up. This explains why the dollar is down and gold and silver are up. This is from yesterday, because China, the Chinese government, urges the banks to curb U.S. Treasury's exposure on market risk. I'll just read the first orange section there. Chinese regulators have advised financial institutions to rein in their holdings of U.S. Treasuries, citing concerns over concentration risk and market volatility. The takeaway here, guys, is China and the rest of the world are moving away from U.S. Treasuries, which means they're moving away from the U.S. dollar, and they are moving to what? We know what they're moving to. They're moving to gold, because now the world central banks hold more gold as reserves than they do as U.S. Treasuries. Okay, that's a lot of deep information. China King. Right? It's not just a fast Chinese takeout place where you can get a $6 Chinese lunch special. Well, they're not even $6 anymore. Susie and I used to get the $6 lunch special at the China King by our house. Now they're $12. Let's talk about silver and gold. Then we're going to talk about Bad Bunny. Then we're going to talk about $200 silver, $700 silver. But think about the Chinese, the last point we'll make on China, the Chinese lunch special to silver ratio. It used to be $5, right? When silver was $20 an ounce, you could get 4 Chinese lunch specials for 1 ounce of silver. What is it now? Let's say it's $10. Okay. But the price of silver has gone up to $80. So now you can, if you saved in US fiat dollars, right, it cost you twice as much to get that Chinese lunch special. If you saved in silver over the last 4 years, instead of getting 4 lunch specials at the Chinese restaurant for 1 ounce of silver, now you get what? Oh my gosh, 8, double. So silver's done pretty well. A great store of value, even when you measure it against the Chinese lunch specials at your local Chinese takeout section. Okay. Bad Bunny. Did you know who Bad Bunny was a week ago today, sitting down here? Honestly, I'd never heard of Bad Bunny. Maybe I saw it mentioned just a couple times. And then before the Super Bowl took off, Bad Bunny, not a political statement. I know it kind of got politicized. This is not a political channel, but he said something very interesting apparently during his halftime show about silver and gold. Let's touch on that. And then we're going to talk about the miners. And then we're going to talk about some unbelievable developments that show us that we could have much, much higher prices for silver in particular. Gray Rabbit Finance brought this up. Did anybody see the subconscious message during the Super Bowl last night? He said, and I can speak Spanish, compro ora y plata, translated to English, means buy silver and gold. He said it during this part of his halftime show. Solamente efectivo. So he basically said buy gold and silver with cash only. Remember, right? Silver and gold are the universal stores of value. What about the mining sector? A lot of you invest in the mining stocks. It's unbelievable what's happening in the silver mining stocks right now. I had Galen McNamara, the CEO of Silver 47. I did an interview with him yesterday. The value proposition, what's happening in the silver mining stocks is cataclysmic. But when that changes, there's a big reason why it can be a big source of major optimism for us. Let's go out here and see what this chart's been going around everywhere, but this came from the White Metal Supremacist. The last time junior silver miners were this undervalued relative to the price of silver was in 2016. Look what it did after that. Have a nice day. And we're going to look at this chart, and I'm going to draw on here for you quickly. But this chart shows the price of the junior silver miners index. That's the SILJ, which is around $30, $35 per unit right now compared to the silver price. And as you can see over here, that ratio is at like almost an all-time low. As of the printing of this, it was right above 0.3. As you can see, the last time we were there, that C19, that spike down that we had, but also in 2016. Guys, the silver mining stocks are priced like silver is at $25 or $35 per ounce. Previous times that we got down to those three red circled sections, one of which is right now, that ratio exploded. If the silver price stays where it is, let's say silver stays at $80 per ounce, easily, if the SILJ index were to go to that level, we could see a doubling or even a lot more than that, because it's gotten a lot higher. You can see up here is 1 on the chart and 1 over here. The reason why that's so important, even if you're if you're invested in silver mining stocks, well, look, I don't have a crystal ball. I'm not a financial advisor. Always do your own research, but it shows how much upward momentum that the silver mining stocks can have in this environment. Okay. And that's just if silver stays where it is. But the other big reason why we want to pay attention to that is because if the silver mining stocks get just a smidge more attention, like they obviously deserve, that will bring more people into the silver ecosystem, right? And could lead to more and more people paying attention to silver, buying physical silver, not just the mining stocks. It's very interesting. On that note, I have a special sponsor for today's video, Apollo Silver. This is about 3 minutes long. It's got a lot of great information about what's going on with Apollo and with the silver market. We're going to watch this. Then we'll be back to talk about $200 silver. Somebody even saying, based on historic data, that we should be at $700 silver right now. Apollo Silver is a junior mining company positioned to become a key U.S. supplier of silver, a critical catalyst metal essential for everything from AI data centers and solar energy to missile systems and 5G infrastructure. Apollo controls over 125 million ounces of measured and indicated silver and 57 million ounces inferred in one of the largest undeveloped deposits in the United States. As America races to secure its mineral independence from China, Apollo's Calico project could become a cornerstone of national security, industrial resilience, and investor returns. With additional exposure to barite and zinc, both critical minerals, and a seasoned management team behind billion-dollar exits, Apollo Silver offers asymmetric upside as silver demand explodes. And global demand for silver is exploding. Current supplies coming from the mining sector just can't keep up with demand. Plus, silver had been trading at its most extreme relative undervaluation to gold, a historic 85-to-1 plus ratio just within the past 2 years. Every time this ratio spikes, silver has delivered explosive gains of up to 400%. And this time, Apollo Silver could be the rocket ship. That's why we're talking about America's secret silver reserve. Deep in the Mojave Desert is a forgotten $250 billion silver district, and Apollo Silver is ready to kick it back into production. With 125 million ounces in measured and indicated resources and an additional 57 million ounces inferred, their Calico project could be the asset that reboots American silver dominance. Because silver is becoming a critical national security asset. The Pentagon consumes more silver than many countries produce. With China stockpiling and Trump declaring critical mineral independence, Apollo's U.S.-based silver project is more than a mine. It's a strategic domestic security asset. But Apollo Silver's Calico project isn't just the largest untapped silver resource in the U.S. Their project also holds high-grade barite and zinc, both critical to U.S. energy and defense, giving this stock multiple shots at upside and Fast 41 permitting acceleration. I'm excited to see what the future holds for Apollo Silver. You can learn more about the company at apollosilver.com. The stock trades in Canada with the symbol APGO and in the United States with the symbol APGOF. Thanks to Apollo Silver for sponsoring this video. This is a physical-driven rally in the price of silver and gold for that matter, but we'll focus on silver. The COMEX and the LBMA, the paper prices are being left behind. They're being forced to adjust to the physical rally that we are having right now in the silver market. But if you think about that, right, within that physical-driven rally, is there a war breaking out right now? Let's see what the silver billionaire has to say about that. And this is super interesting to consider, guys, because what he tells us makes a lot of sense. He says, right, who are the big sources of demand for physical silver? The stackers and the manufacturers are about to enter a death grudge match, or war, as I called it, to see who gets the few remaining ounces of silver. Note, the stackers are growing in numbers exponentially. So guys, within that physical rally that's going on, there really is a battle now between the industrial users of silver and the physical stackers. Maybe people like you who like to collect silver coins. Who would ever want to do that? Or bars for that matter. But what's even more important for us to realize, both of those sources of physical demand, the industrial demand, and on top of that, the number of people that are moving their wealth, the stackers, are also growing exponentially. Like David Bateman, the silver billionaire, said. He's our guy here in the United States, for those of you who don't know, who owns, I think, over 15 million ounces of silver now and keeps buying more and more and more. So when we take a deeper perspective, this is a physical-driven rally. Within that physical component, you have industrial users who are demanding more and more silver, and you have the investors, the stackers like you that are demanding more and more. It's no wonder, right? He's our David versus the Chinese paper tiger, Mr. Bian, David versus Bian. He's our hero in the United States. He's all about physical silver. It's going to get very, very interesting. Let's talk about $200 silver. He's at it again, right? World famous, well-known author. Mr. Robert Kiyosaki is buying silver. This just came out last night. He said, I just purchased another 600 silver eagles at $82 per ounce. I still believe silver will reach 200 an ounce or more in 2026. Like we talked about earlier, guys, the US dollar is in trouble. Savers of fiat currency, fake dollars, are the biggest losers. And when we talk about, there's a reason why we want to talk about the US dollar being in trouble. Not only is it in trouble from like the DXY perspective, which compares the dollar to other fiat currencies, but the big bonus, the big key thing, and sometimes this can be a little challenging to grasp initially, the big thing for us to remember, not only is the dollar going down relative to those other, it's the prettiest horse in the glue factory, all those things, right? Those comparisons. Not only is it going down relative to other fiat currencies, but all the fiat currencies are going down in value simultaneously. So as they're falling, they kind of seesaw back and forth, but there's like a double negative impact on what's going on with the dollar right now. I hope that makes sense. And maybe if some of you don't understand it, I can make a whole separate video about that. But like all the fiat currencies are going down in value. And when the dollar goes down in value relative to the fiat currencies, it's like a double whammy to the US dollar. I don't like it. I want to make that very clear. And I'm sure if you're in the United States, you're patriotic as well. I love this country. I don't agree with what happened in 1971 when Nixon took us off the gold standard. We won't go down that path. But we don't like what's happened with the value of our dollar, which has been the direct result of both the fiscal and monetary decisions that have been made by many of our quote unquote leaders over the last 50 years. I tend to be more aligned with the founding fathers of the country. Everybody's different. You can have your own opinions, but they had some very strong things to say about central banks, number one, and also about the backing of the dollar with precious metals. Enough there. How about $700 silver? You want to hear about $700 silver? I do want to say thank you to my regular channel sponsors as well, First Mint and First Mining Gold. Thank you for your ongoing support and sponsorship. But $700 silver. Can we look through a broader lens of history and see that right now we could easily be, and you hear, right? How many, this was years ago for those of you who are new. There were some big names in the precious metal sector that always told us they could see $600 silver. So $700 silver, not that far out of the question. And let's look at this through the broader lens of history. And it's fun as well because our favorite rancher brought up some incredible information about that. There he is right there. He has a whole video about it. But basically what he said is this: in ancient Greece, 7 ounces of silver would get you 1 cow. 7 ounces of silver to 1 cow, 7-to-1 ratio. Today, where we are today, it takes 70 ounces of silver to get 1 productive cow, which is about $5,000. It's a 70-to-1 ratio. If silver were to go back to the ratio that we had in ancient Greece and throughout other periods of time of 7-to-1, silver would have to go to $700 per ounce per cow. And while we may look at ratios like that and ideas like that and think, oh, that's crazy. Oh, look, remember, I sat down here. He wants to say hi to you. Years ago with this guy. Remember him? He's Smitty, right? He was the blindfolded bear. And he had a blindfold on. Now he's wearing it as I don't know what you call it. It's across his shirt. He had a blindfold on that we said we would take off when silver hit $85. People called me crazy and that it would never, ever, ever happen. Well, as you know, silver did cross $85 in the spot market just a few weeks ago. And we had the joyous occasion, and Smitty's very happy, of taking off his blindfold. And lo and behold, we were surprised, right? He's got a couple 1/10 ounce silver Britannia bars as eyeballs. Okay. So when do we get the $600 silver? What do you guys think? Do I need to get another animal and blindfold it with $600? I think it's real possible. I think it's not, I believe absolutely I will see $600 silver during my lifetime. And as crazy as that sounds right now, don't forget, okay, when I was on with Galen McNamara, the CEO of Silver 47 yesterday, we talked about how back in October of 2023, just a little bit over 2 years ago, we had our first meeting and the silver price was $22.79 per ounce. At that point, had we talked about, and Smitty was in there. Okay, you can go back and check. He's in the background. We actually talk about him. I said, I'll take the blindfold off that bear when silver hits $85. That seemed crazy back then, right? It seemed crazy. Okay, just like talking about $600 silver right now, it sounds crazy to me. I admit, okay? But when I take a step back and look at it through the lens of history and through the lens of what's going on with the paper fiat currencies in the world, if we choose, right, gold and silver, they've always been the reserve currency of the world for thousands of years. So if just right now we decide, oh, we're going to measure the price of silver with US dollars, well, you know, anything's possible. Oh shoot, what's his name? The guy, oh man, I'll remember in a second. He talks about the price of gold. People ask, how high can the price of gold go? How high can the price of silver go? And he says infinity. Darn it. Hold on. Susie, are you up there, Susie? Over? Who's the guy you keep? Oh, Peter Schiff. Sorry, Peter Schiff. I just remembered. Peter Schiff. I hear him say, I don't want to put words in his mouth, but the price of gold and silver can go to infinity. So to say $700 silver, to say $85 silver, look, guys, okay, I really appreciate you joining me down here in the basement. Don't forget to subscribe. But if we got into a time machine and went back, right, to October 28th, I think it was, of 2023, right, and right now I said, hey, I think silver could go to $85. It would seem just as crazy as thinking that silver could go to 200, like Robert Kiyosaki says, or 600, like I say I'm going to see during my lifetime. It would seem just as crazy back then. China is taking over the world of precious metals. India is taking over the world of precious metals. The world has always controlled precious metals. Yeah, there's temporary little aberrations that occur from time to time where fiat paper money seems quote unquote valuable. But the reality is silver and gold have always been the world's reserve currencies. There's a reason why, a big reason why the world central banks now hold more gold than US dollars. That reason is quite simple. The world central banks are the most sophisticated financial institutions on the planet. Okay. There's a reason why just behind them, Tether, that tokenizes gold, is the largest buyer of gold now, right behind the world central banks. Okay. It's because gold and silver have always been the world's reserve currencies. They are the measure stick. Okay. It's hard for us to sometimes compute that, but it's the reality. Okay. An ounce of silver, an ounce of gold have always been an ounce of silver, an ounce of gold. They've always bought essentially the same thing, could be traded for essentially the equivalent same thing throughout thousands and thousands of years. I went off on a diatribe. Please subscribe to the channel. I love being able to come down here and connect with everybody. I hope you have a great day, and I'll see you. Yes, you. I'll see you next time. Okay. Bye-bye.